Hi, it's the Honest Agent again. We're still talking about auto insurance rating, and one of the next big factors that a lot of people don't realize can have a tremendous effect on your auto insurance rate is your past insurance record. That's right. The companies want to know that when you're applying for new policy, that you had a past policy with no lapse in coverage. That means if you're trying to buy a policy on April 5th, and your other policy expired April 1st, you've got a 5-day lapse in coverage. That really hurts your insurance rate. Plus, they want to know how long were you with your last insurance company and how long have you had your continuous insurance. A lot of people think if they shop every 6 months because the rate goes up, so they're switching carriers either every 6 months or every year. That results in them jumping around from company to company, and that usually will result in a lapse a day here and a day there. The insurance companies don't like that. That puts you on what we call a higher tier. Remember, there are two ways that you are charged. There's tiering and then there's points. Your tiering is based upon your credit, your past insurance record, okay? You're tiered. The higher tier, the better your credit, the longer you've been with your past insurance. How long is good? At least 3 years. You should try to stay with one carrier if at all possible. And the longer you've been with them, the better tiering you're going to get. Just like the better credit, the better tiering you're going to get. So if you've been with your past company 7 years, 10 years, you're going to get a better rate when you shop for new insurance. And I know that's not always possible, but the longer you're with your past company, the better off you are, and there should be no lapses. Even if you switched after 3 years, 3 years ago, and then you buy another company, make sure that the dates line up. There's no lapses in coverage. That can have a tremendous effect on your current insurance rates. Another surprising factor is your prior liability limits. Every state has minimum limits that they feel are acceptable under their code. Like I said, I'm from Chicago, Illinois. In Illinois, minimum limits are bodily injury, 25 per person, 50,000 per occurrence. Property damage, 20,000. And then in Illinois, you have to have uninsured motorist, 25,000 per person bodily injury, 50,000 per occurrence. That's minimum coverage. And that's what a lot of people ask for because they want the cheapest rate they can get. But most of your standard preferred companies don't even want a client coming to them who's only had minimum coverage. You should try to carry the highest liability coverage you can. Because let's face it, 2550 bodily injury and 20,000 property damage is really not much today. I've seen people go through the emergency room and rack over $15,000 in bills. And 20,000 property damage? Your average car today is over that. You know, if you hit a wall or a post or something and your damages exceed your limits, they can come to you personally for the additional amount. Okay? So carry 50 and 100,000. 100, 300 is even better. That's really what you should carry, if at all possible. 100, 300,000 bodily injury, 100,000 property damage, 100, 300,000 uninsured motorists, and when you take above the minimum limits, you get another coverage called underinsured motorist for the same amount, 100, 300. You know uninsured protects you if you're injured by someone with no insurance. Underinsurance protects you if you're injured by someone who doesn't have enough insurance to cover your injuries and your losses. It's more money, granted, but when you look at how much you're going to pay for that additional coverage, and then you look at how much you're going to save, and how many more companies are willing to give you a good rate because you have those higher limits, believe me, in the long run, you're saving a lot of money. You're getting a much better tier when you buy the insurance. And remember, if you get a low tier due to poor credit and basic liability limits, or you have gaps in your policy, once you're at that tier, you're kind of stuck there. Okay? So you want to get in, when you're shopping insurance, you want to get the best tiering you can. okay, by having the best possible credit you can. I know after COVID, a lot of people lost their jobs, had financial difficulties, but I'm telling you the truth, this is how your auto insurance is figured. Okay, and yes, certainly it's also rated upon your age, your marital status, the kind of car you drive, and your driving record. But it also, your credit, your past insurance, your past coverages also can have a tremendous effect on your insurance rates. So that's how you can save money. Now, if you're carrying a minimum policy and you're running out in a few months, raise up your liability limits now before you get close to expiration, so you get advantage of having that additional higher coverages. See how much it's going to cost to raise those liability limits up. It's not as much as you think, and you will save more than that when you shop for new insurance. Next video, I'm going to kind of wrap this up and tell you a little bit more about how to save money on auto insurance, what you can do no matter what company you go to. I hope you'll tune in.